Why was the market crashing? Are we in a bear market, a bull market? What's going on, guys? In crypto, we tend to live in our own little bubble. We take a look at the meme coins we like, the layer twos that we like, or even Bitcoin, but often we don't take a look from a bird's eye view. Look at the entire economic market. And that is what we have to do to really figure out, why is the market startled right now? Why are we not in a full-on bull run, guys? In this video, we're going to go over Federal Reserve data going on with what could happen with interest rates, what's going on with unemployment, where is Bitcoin stable coins, and more at, guys. We're going to get into everything economy, which will lead to what's happening in crypto and more. But first, I want to welcome you back to Freeman Finance and Crypto, where if it makes money, it makes sense, guys. From the bottom of my heart, I am truly grateful for every single one of you. But if you're not subscribed, please pause the video, hit subscribe, hit that bell notification. Now let's get into the video, guys. We can see Bitcoin is under 60,000. Things are trying to recover a little bit, but it's still not there because people are worried about a recession. Okay, we are currently at 56.29% of a recession. If we take a look, this is going back 5 years. When we take a look at this, we have been anywhere between 70 and 50% essentially all this year. So this is nothing new, but it is starting to collaborate with other data that shows that this might be coming true. But everyone wants to know, when is the Fed turning on that money printer? Well, I think it is happening soon, but are they going to turn it on full speed or just throttle it down? And why are they turning it on? Are they turning it on to pump your crypto bags? No, they're not. And I'll tell you exactly why they do this in a minute. But if we take a look at it, this is the odds from cmegroup.com. Okay, the next FOMC meeting, when the Fed meets and will cut interest rates, we think is in 21 days and 2 hours at the time of recording this video. But there's a 65.5% chance that the interest rate is cut 25 basis points or 25%. So let me ask you, would you be excited if you went to the bank and they said, hey, you have a 6% interest rate, now you've got 5.75. Would that be enough to really move you inside? Or would you want at least half a point cut, 3/4 of a point cut to really feel like you're getting something? What is this? And that is what we are most likely to get. And 50 basis point or 0.5% cut is only 34.5%. A lot of people think if they were to cut 0.5%, it would freak the market out. But I personally believe that a 1/4 point cut will just kind of irritate the market, and we could potentially see a bigger sell off. But why do they cut these? Do they cut it because your favorite meme coin's going down? No. The Fed's job is to ensure that unemployment stays low enough where people can have jobs and feed their families. And if we take a look at this data right here, the last data in July came out hotter than expected at 4.3% in the unemployment. And so that is not good. You can see this trajectory right here. You know, if it just keeps going up, it is not good at all. You can kind of take this big peak out because of a lot of this was artificial from whenever places were forced to shut down. But if you just kind of come down here, take this, cut over to here, it just kind of, would make a real nice low right there of, around 3.5%. But if we start ticking up back to where we were in 2006, do you remember what happened right after that? In 2008 was the housing crisis. Okay, when the Fed comes in and cuts interest rates, they try to give employers cheaper funds, cheaper money in order to employ more people, invest in research and development, things like that. Now, if they don't do that, unemployment goes up, and that then affects the stock market. But that is more of a lagging or secondary reason why they cut interest rates. They don't cut interest rates just to pump your bags. I can promise you that. But the big thing everyone is looking for, this is MSN.com, is NVIDIA earnings coming out today. We know there are a lot of artificial intelligence tech company. They have been doing amazing, and everyone is waiting to see what happens with this. If NVIDIA misses earnings or is disappointing, I believe this will cause a shock across the entire fiscal market. That is cryptocurrency and regular markets, okay? The S&P 500, the Dow Jones, everything will see a sell-off. But let's get into some actual crypto. Now that we've taken the bird's eye view out and really looked at all the macro things that are affecting crypto, let's now take a look at crypto in particular. And here we are on Max Data app, guys. There's actually a link down in the bio. If you want to get $250 of credit on this account, all you have to do is sign up, and then you'll be able to use that for add-on features and stuff like that. But if we take a look at this is BTC on the daily. We can see that this is not a good thing, guys. We are underneath the 200-day EMA. I mean, obviously we're under the 50 and 100 too, but we are under that 200. So that is not good. We definitely want to see BTC get above that. You could see it tried and now it is back down. So guys, this is just something that we really have to watch out for, because we know our favorite meme coins, our favorite layer 2 projects, everything is dependent on big daddy Bitcoin, and that is what we have to watch. But it's not all bear and gloom when it comes to this. The data right now does not look good, but some of the data that I use to forecast what could be coming in the market is actually looking pretty good. And when we take a look at this Max Data as well, what we are looking at up top is Bitcoin on exchanges, guys. And you can see it has not been this low since it was on the way up. It's never went down this low since it's been that high. And this was back in November of 2018. So more and more people are holding their Bitcoin on cold storage wallets. That's good. Less Bitcoin on exchanges. But what I really want to get into is this, and I touched on this in the turbo video, but as you can see, this is stable coins right now, and stable coins is up over the last year drastically. If we go back to August of last year, or yeah, let's find that end of August of last year, stable coins is up 48.47%. That is massive. This is liquidity on the sidelines waiting for something. So what are they waiting for? Are they waiting to see if this recession comes through? Are they waiting to see what the Fed does with interest rates? Are they waiting to see if unemployment comes down? But whatever they're doing, we have to keep in mind that Bitcoin has not steered us wrong so far, guys. And this could completely change. Remember, guys, none of this is ever financial advice. I'm got slightly a degen and loves finance. So this could all go to zero and everyone could lose their money. But when we look at this, a lot of people believe in the power law. And like I said, it has not steered wrong thus far. If we just zoom in on this, it really follows it very well. And so people are expecting the bull market to happen anywhere between the end of this year on the early side to the end of next year. So if we really take a look at that, the end of this year would put us somewhere like right there, and then November timeframe of 25 would put us right here. So we've got in between these two ranges. So on the low side of those ranges, it's a $36,000 BTC, and the later low side of that is a $46,000 BTC. So right here on the low side, it's anywhere between 36 and 46. Okay. Well, if we go over here to the high side and really take a look at it, that would put Bitcoin anywhere between 340K, which is crazy. And then if we take a look at this right here, that's 420K. So that is extremely high moon boy type price predictions. But right here in the middle, this correlates a little closer with what people are thinking, 104 to 150. So right there, that fair value or whatever you want to call it, right there at the yellow line, right there in the middle, the average right good price for Bitcoin puts it right at around $100,000. And if we go back and take a look at BTC and we look at this in a macro outlook of a large time frame, we look at it, we really do have a pretty good bull flag going on, and we have a flagpole of somewhere around that size that is looking to break out anywhere in this range right here. We could go right here at like 92,000 and then could eventually extend out to, 117 or 120. So, is this going to happen? That's what everyone wants to wait around and see. That's what everyone is anticipating. But if this does not happen, alts are going to continue to bleed and everything else is going to go bad. Nothing else is going to thrive long term in crypto without BTC. But at the end of the day, the market is afraid of this R word. They want to see what the Fed does. I really think they will laugh to the sell button on 0.25% interest rates cuts, especially when they've been raising interest rates 0.5% multiple times. But guys, let me know, what do you think about this? I hope this helped giving you a macro outlook on what else affects the cryptocurrency market. We're crypto bros. We like to just stay zoned in and look at our tokens, look at the meme coins, look at Bitcoin. But guys, we've got to keep in mind, this is not just a small world anymore. There's institutional investors that bring traditional finance or TradFi into our Web3 ecosystem, guys. So let me know, what do you think is going to happen? Are we going into a bull market or a bear market? Is a recession coming, or will it be avoided? What the Fed is doing, is that going to be enough, guys? Watch this video up above. Hit the like button. It really helps the algorithm. And if you're not a part of the Freeman of Finance family, what are we doing? Subscribe. I love you all.